41,360,000,000 Kenya shillings. This is the amount of money M-PESA handles in person-to-person transfers per month. But how did they get here? You see, M-PESA spends millions on marketing every year, but will never once try to sell you on the idea of what their service actually does. They sell an idea: financial freedom, instant money transfer, economic empowerment. But some will say it's a distraction from the disturbing truth. There are serious accusations against the company that it has caused surveillance, exploitation, monopolization, and much, much worse. So, buckle up. We are going on a journey through M-PESA's untouched history, spanning 2 continents and countless hidden players. We will be examining how M-PESA really became Kenya's most revolutionary financial system and at what cost. Because one thing is for sure, you don't build an empire handling roughly 10% of a country's GDP by telling people your dark secrets. M-PESA gives you the refreshing new feeling of instant money transfer. There's nothing like the convenience of M-PESA. Back in 2004, there was a growing frustration with traditional banking in Kenya. Most Kenyans, especially in rural areas, had no access to bank accounts. The formal banking sector had failed the majority of the population. This created a massive problem for people living in urban centers who needed to send money back to their families in rural villages. The options were limited: tedious trips to the post office, expensive wire transfers, or risky practice of sending cash with bus drivers. And one person facing this exact problem was a man named Nyangaka Anyona, who needed a way to send money to his mother in remote Gesusu village in Kisii while living in Nairobi. The thing is, his mother didn't have a bank account like most Kenyans at the time. So Anyona had 2 options: spend precious time queuing at the post office to send money order, or trust the bus drivers with cash in a process that was essentially gambling. After repeated failures with the bus driver method, Anyona started to think, what if there was a better way? What if he could somehow leverage on the technology that was rapidly spreading across the country, mobile phones? He came up with an ingenious solution: convert the cash to airtime, send it to a shopkeeper near his mother, who would then give his mother the cash minus a small commission. The shopkeeper would then keep the airtime credit as payment. The simple system was revolutionary. Soon, Anyona was not just sending money to his own mother, he was handling transfers for friends and neighbors too. By November 2004, he was moving nearly 10 million Kenya shillings through his network. Seeing the potential, Anyona tried to formalize this idea. He patented his mobile money transfer system and attempted to register a company called MobiCash, but a major roadblock prevented him. The Kenya Treasury turned him down, claiming he was essentially running an illegal banking system. According to the Bank Act, anyone handling money transactions needs a banking license. Meanwhile, halfway across the world, in the United Kingdom, a Vodafone executive named Nick Hughes was wondering how mobile phones will be used to distribute microfinance loans in Africa. Vodafone owned 40% of Safaricom, Kenya's largest mobile provider, with about half the market. Hughes wrote a proposal to the UK's Department for International Development and received €1 million in funding. In May 2005, with the idea rejected by regulators, a determined Anyona sent an email directly to Michael Joseph, the CEO of Safaricom at the time. The email contained his business model for sending money via airtime transfers. Oddly, no reply came from Safaricom, but shortly afterwards, the company suddenly accelerated its development of mobile money system, recruiting airtime dealers in Thika for a pilot program. By March 2007, Safaricom officially launched M-PESA. Within a month, nearly 20,000 Kenyans were using this service. The official narrative credited Nick Hughes and Vodafone. Anyona was left with just his patent and unanswered questions about the striking similarities between his system and M-PESA. But this contested original story is just the beginning. What happened next will transform not just Kenya, but the entire financial landscape of Africa. Rightly before M-PESA launched, Safaricom was primarily a mobile provider, competing with other telecommunication companies for market share. But M-PESA wasn't just another product, it was about to become an empire. Initially, M-PESA was positioned as a way of microfinance borrowers to receive and repay loans. But Safaricom quickly realized the much bigger opportunity: person-to-person money transfers across the entire country. This pivot was genius. By focusing on the simple act of sending money, M-PESA addressed a massive pain point that affected nearly every Kenyan family. Within a year, M-PESA had over 2 million users. By 2010, more than 50% of Kenya's adult population was using the service. Today, it processes transactions equivalent to over half of Kenya's entire GDP. But M-PESA's rapid growth was not just about convenience. Safaricom implemented a marketing masterclass that would make even the biggest global brands jealous. First, they built a vast network of agents. Small shop owners would handle cash deposits and withdrawals. The green-branded M-PESA shops became ubiquitous across Kenya, appearing on literally every street corner in urban areas and spreading to the most remote villages. Then, they implemented a referral strategy where existing customers would show friends and families how to use the service, creating organic growth through trust networks. The advertising was equally brilliant. Rather than focusing on the technical aspect of the service, they sold emotional stories. A son in the city sending money to his mother in the village, a father paying for his daughter's school fees from hundreds of miles away. These were not just advertisements, they were mini dramas that reflected the real lives and aspirations of everyday Kenyans. M-PESA was not just selling a money transfer service, it was selling family connection, financial dignity, and progress. By 2011, M-PESA had more physical cash points than all the ATMs and bank branches in Kenya combined. It was no longer just about money service, it had become Kenya's de facto banking system. And as M-PESA grew, so did Safaricom's power. The company went from being just another telecom provider to becoming the most profitable company in East Africa, with M-PESA as its crown jewel. But there was a dark side to this spectacular growth. As M-PESA became an essential infrastructure, Safaricom gained unprecedented power over Kenya's entire economy. And like any entity with enormous power, they weren't afraid to use it. While everyone was celebrating financial inclusion, few noticed that a single company was quietly gaining control over an entire nation's financial plumbing. But the true scale of M-PESA's power would become clear in a way nobody expected. Imagine if KCB, Equity, Cooperative, Western Union, and your bank were all the same company, and they were the only real options in town. That's essentially what M-PESA became in Kenya. At its peak, Safaricom controlled over 75% of Kenya's mobile money market. This was not just market dominance, it was near complete monopoly over the essential service. With this level of control, Safaricom could essentially charge whatever fees they wanted, and they did. While the fees might seem small to the outsiders, sometimes just a few cents per transactions, they represented a significant percentage of the average transaction size in a country where most people live on just a few dollars a day. These fees generated billions in pure profit for Safaricom and its parent company Vodafone, and a significant portion flowing directly out of Kenya to foreign shareholders. But M-PESA's monopoly was not just about fees, it was about regulatory capture and a systematic lock-in. As M-PESA grew, Safaricom managed to navigate a unique regulatory space. Despite functioning essentially as a bank, holding deposits, facilitating transfers, and eventually offering loans, M-PESA was not subject to the same regulations as traditional banks. They claimed to be merely a mobile wallet service, not a bank. This regulatory arbitrage allowed them to operate in the gray zone with less oversight despite handling billions of dollars. By the time regulators caught up, M-PESA was already too big to regulate effectively. it had become systematically important to Kenya's economy, too big to fail. Attempts by competitors to enter the market were systematically crushed. Safaricom's network effects were simply too powerful. If most people you knew used M-PESA, there was little incentive to use anything else. Every single M-PESA transaction creates a data point. Who you pay, what you buy, why you spend, when you transfer money, to whom, how much, how often. This is not just a payment system, it's potentially the most comprehensive financial surveillance infrastructure ever created for a population. Think about it. M-PESA knows when you pay rent, which shops you frequent, how much you send to your family, when you get paid, who you do business with, and even your travel patterns based on where you withdraw cash. This data is a goldmine not just for commercial purposes, but potentially for government surveillance. In countries with evolving approaches to civil liberties, this kind of financial mapping is unprecedented. There have been credible reports that M-PESA data has been used to track political opponents, monitor activist funding, and build detailed profiles of individuals based on their spending and transfer patterns. The system knows when opposition political rallies are being organized based on unusual transfer patterns. It can identify potential protesters through their financial activity. It can map entire social and business networks through payment flows. And unlike traditional banking, which requires warrants and legal processes to access financial records, the legal protections around mobile money data are often much weaker or poorly enforced. But it's not just government surveillance that's concerning. There's also corporate surveillance. Safaricom uses this data to develop credit scoring algorithms that determine who gets access to loans and at what rates. These black box algorithms make decisions that can profoundly impact people's lives, often with little transparency or resources if you are deemed uncreditworthy. The company has expanded into lending through services like M-Shwari, using your transaction history to determine whether you qualify for a loan and how much you can borrow. These lending algorithms are designed to maximize profitability, often at the expense of the most vulnerable users. Interest rates can reach extortionate levels when annualized, creating debt traps for the unwary. And if you fail to repay, the consequences are severe. Not only will your credit score be damaged, but you can effectively get locked out of Kenya's financial system. What makes this surveillance particularly insidious is that it is marked as a convenience. The spending habits are not just being tracked by some shadowy agency, they are being collected to serve you better and offer you personalized financial services. This is surveillance capitalism at its most efficient, not imposed by force but eagerly adopted for convenience, with the true cost hidden from view. M-PESA was building this unprecedented surveillance system. It was also creating something potentially more dangerous, a prototype for the future of money itself. The most disturbing aspect of M-PESA is not just what it is now, but what it's proving possible for the future. M-PESA is essentially a working prototype for central bank digital currencies, potentially programmable money systems that will give unprecedented control over how, when, and where people can spend their money. Think about it. M-PESA has created a population already comfortable with digital-only currency, already accustomed to having the transaction tracked, and already dependent on centralized systems for daily survival. It is the perfect social experiment for what will become the ultimate form of financial control, running in real time across millions of users who never consented to being the test case. Central banks worldwide are closely studying M-PESA's success as they develop their own digital currencies. The lessons they're learning are not just about technology, they're about social acceptance and behavioral change. What makes M-PESA particularly valuable as a prototype is that it succeeded in a challenging environment with limited infrastructure. If it works in rural Kenya, it can work anywhere. But there is a crucial difference between M-PESA and potential CBDCs. While M-PESA is run by a company with certain profit motives, CBDCs will be controlled directly by governments with potentially different objectives. This would include abilities to freeze funds instantly without court orders, implement negative interest rates directly, set expiration dates on money to enforce spending, restrict purchases to approved vendors or categories, block transactions based on social scoring or behavior. M-PESA has shown that when a system becomes an essential infrastructure, people have little choice but to accept whatever terms are offered. The convenience factor outweighs privacy concerns almost every single time. What started as a system to help people send money home could ultimately become the blueprint for the most sophisticated financial control system in human history. And the most disturbing part, this was not the plan. No one set out to build this prototype deliberately. It emerged organically from a simple idea to solve a real problem. But now that the blueprint exists, the question is, who will use it and for what purposes? Look, I'm not saying M-PESA is evil. It has genuinely transformed lives and brought real financial services to millions who had none. That's undeniable. The problem is not just the technology itself, but the concentration of power it enables, the financial extraction it facilitates, and the disturbing precedents it sets for our digital future. We have to ask ourselves some uncomfortable questions. Did a Kenyan investor get erased from history? Why does a system that processes most of Kenya's GDP primarily benefit foreign shareholders? And what happens when one company controls the financial plumbing for an entire nation? And just how we can bank the unbanked, but who truly benefits when we do? And what freedoms might we be sacrificing on the altar of convenience? Because while we are celebrating financial inclusion, we might be sleepwalking into financial surveillance built on an idea that might have been stolen from the rightful creator. Somewhere in Kenya, Nyangaka Anyona holds a patent for mobile money transfer. Meanwhile, Vodafone celebrates its innovation and collects billions of profit from a system suspiciously similar to what Anyona described in his unanswered email. This is not just about one man's stolen idea or a company's monopoly. It's about the future of money itself and who gets to control it. As digital currency systems spread globally, M-PESA's lessons, both good and bad, will shape how money works for billions of people. And that's why this story matters. Because one thing is certain, in a rush to celebrate innovation and progress, we sometimes fail to ask who's really paying the price. If this peek behind the digital curtain got your financial spidey senses tingling, do what the algorithm demands. Smash the like button, annihilate that subscribe button, and absolutely demolish the notification bell. Next week, we are exposing how investment hubs use some psychological tricks as Vegas casinos to keep you making trades, even when destroying your returns. This is Financial Truth, reminding you that in a world where money is increasingly digital, your financial literacy and knowing the real history is your last line of defense. Stay vigilant, stay informed, and always follow the money.